You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the old Options Insider Radio Network, beaming to you here from the options capital of the world, Chicago, of course, in our scenic, not too sunny this time of year, but still scenic Options Insider Radio studios. And of course, we produce a lot of fun programs for you on this network, 13 to be precise, including many, over 100 now archived episodes of Volatility Views, going back, well, several years, almost 4 years, I think, going on for Volatility Views. So it's quite the storied legacy, great guests we have on the program, great discussions about a wide variety of volatility topics. You can, of course, find all of that great stuff. If you're a newcomer to the program, or maybe you missed some of our back episodes, you can find them, of course, theoptionsinsider.com. Top left corner of the homepage, Insider Radio Network tab. Click on that, and it all pops up from there, and you're good to go. You can stream, you can download, do whatever you want to do. Of course, you can find it in all the major outlets, iTunes, TuneIn, Stitcher, etc. Even for our mobile apps, a few of you have written in recently asking about the push notifications on the mobile apps, especially on the Android side. A few of you are asking, hey, can we, is this enabled there? I believe it's enabled by default on the iOS app. We'll have to look into enabling it for you on the Android side. I don't blame you. You want to get a notification whenever a new episode comes out, makes it easier to use. We're going to make sure that's turned on for you very soon. So keep an eye out for that. Meanwhile, of course, we're also joined on the old program by my usual volatility compatriot, the rock lobster himself, Mr. Andrew Giovinazzi, from his myriad appearances on the old network, including his moonlighting gig over there, mentoring a few folks over there in the land of the pit. Mr. Rock Lobster, welcome back to the Volatility Views program. I believe it's been a few weeks.
It has been a whole few weeks. I don't know what Sebastian's doing, but he said, Andrew, I need you to do vol views. But so here I am. Actually, this is one of my favorite shows to do on the network because we talk about my favorite subject.
It does hit near and dear to your heart, I know. I think the last time you were on, in fact, was a few weeks back when you were calling for VIX well north into the stratosphere, like the 25 handle or so.
I do not recall that show, sir. I have no idea what you are saying about that particular show.
You said VIX can go nowhere but higher here, sir, and it immediately ticked to 19 and has never looked back.
And it got crushed. At least I did not talk up my position.
You're much more of the vol optimist than I am. That's one moment when being a cynic paid off in that environment. And we're also joined, I am pleased to say, by an old friend of the program. We're welcoming him back on. It's been a while. He is Russell Rhoads. He wears many hats over there, including an options instructor at the Options Institute. He's written a few volatility and trading related books you may be aware of. He's kind of just the volatility man about town, I think he has on his business card. Russell, welcome back to the program, sir.
Well, thanks. Did you just call me old?
No, I said volatility man about town. It means you get around, you do a bunch of stuff.
You started out with an old friend, and I
say that about everybody.
That's not the way to get.
Yeah, he's fitting into the network quite well. He's been on approximately 2 minutes, and he's already taking umbrage. This bodes well for our future together, Russell, here on the program.
Well, I know that with the absence of Mark Sebastian, I got to work some things like that.
Yeah, someone has to take some umbrage.
In all sincerity, I appreciate being back, and like Andrew, I'm always happy to talk about VIX. It's by far one of my favorite topics to address about the markets.
Like I said, you've been on before, but it's been a little while, and you've certainly been up to a few things since the last time you've been on the program. So why don't you give our listeners an update on all things going on in your neck of the woods, what's cooking over there in the Options Institute, as well as, of course, any new tomes you may have been working on or have on the horizon there.
Well, one thing that changed, I actually have been moved up to director of the Options Institute. So I got to go over to Europe for our risk management conference, which is very much of a VIX love fest, and learned an awful lot while I was over there. It was kind of a good time to be there because it occurred. The conference was in early September, right after the what I like to refer to as the volatility event, which is what I refer to every sell-off as, around August 24th. It was interesting. Because most of all the presentations were locked in before we had that happen, and a majority of the presentations were about selling volatility strategies, which I thought was somewhat interesting. And like 3 years ago, it was all about getting long volatility exposure, and I don't know if there's a contrary indicator there or not. I'm going to our first Asian version of risk management just after Thanksgiving, and it's the first time they're going to put me in front of people. So I'm pretty excited about that. I'm going to do a primer on options and volatility strategies, and just looking down the schedule. I know that I'm supposed to do that, and it's kind of a lead-in where Buzz Gregory is going to talk about the current volatility regime, and then we've got another presentation called Volatility and the Allegory of the Prisoner's Dilemma. And the Prisoner's Dilemma is basically how can two very rational people act in completely differing irrational manners, which I guess is how we get what we get in the volatility markets sometimes.
Good stuff as always. All right, with Russell on board, it's time for us to dive right on into our first segment. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program we break down the week that was and indeed still is from a volatility perspective. We are recording this on Friday, October 30th. For all of you playing the home game, hopefully getting your trick-or-treat lineup and costume ready for the big day tomorrow. We are still, of course, feeling out the post-Fed undulations here in the old market as we're recording this today, intraday. The market seems to be coalescing slightly to the upside at this point. Most of the major indices pretty much up fractionally on the day after some interesting earnings coming out last night. We'll get to those in a little bit. And of course, the exhale starting to kick in over there in the realm of volatility. VIX Cash off about half a point or so, hovering around the 14 handle. So even farther south from the 20 handle since the last time Andrew was on the program. If I can just continue to twist that knife, because it is indeed ever so fun. And it is timely, Russell, since you're joining us on the program today. We'll make you squirm a little bit because the breaking news as we are doing this just this morning, you folks over there at CBOE coming out with your quarterly earnings update. It still is fun to me, even though it's been a while, Russell. And I know you can't participate in this, Russell, in terms of trading it. But is it still as meta to you as it is to me to actually trade an option on the CBOE? The concept of it still kind of makes me chuckle.
You mean as far as
just the notion of trading options on the CBOE seems kind of meta.
It's the way it's always been as far as I've been around. So I can't really think of it as being meta.
I mean, actually, like buying like a call on the CBOE. That's what I mean.
Oh, you mean on my on my exchange?
Yes, not actually trading on the CBOE.
You know, because we were the last. I can say this. You know, we were the last exchange to go, last major exchange to go public. So you know, we still are a really flexible place. And I've worked at some public companies in the past. So you know, the mentality around here being very entrepreneurial is not the type of thing which is a positive for here, is not the type of thing that you normally associate. So that's with a public company, and a very large public company in that. So that's kind of my a different perspective, I guess, as an employee, is just, you know, that we still are as flexible as we were when we came up with VIX and SPX and all those other things in the past.
That is good to hear, because that isn't typically the refrain we hear about public companies these days. And going into the earnings last night, of course, they were pricing in about a little over $3, about $3.25 straddle for you guys, which worked out to a little bit south, just near 5% or so. They were pricing in, and it seems like at least the numbers are pretty interesting this morning. Of course, CBOE, when you're talking CBOE numbers, you're talking a lot about the volatility space. That's a big driver for you guys over there. And looks like ADV was pretty solid in Q3, about 5.25 million contracts. That's up from south of 5 million last year. This time about 4.95 million, so up about 6%. And that probably doesn't come as a surprise to a lot of our listeners. Q3 certainly a bit of an active period from a volatility and index product perspective, and that, of course, being the lion's share of the product. Total volume, 335.7 million contracts, again up from about nearly 317 million last year. Still, despite those numbers, the market kind of shrugging it off a little bit. Like I said, they're pricing in about a $3.25 move. We're seeing about it was off about $1.20. Now it's off about a little over $1.30 or so intraday here. So still underperforming from a vol and from a straddle perspective, but still interesting numbers coming out from the vol space. People are trading up them volatility products, which we like to hear on the old program. But earnings aside, Russell, since you're our guest here, we'll give you pride of place. Aside from the earnings, what else caught your eye in the week that was from a volatility trading and analysis perspective?
Well, the thing that really that first off, because of everything that's been going on, I basically had only been in the office about 3 days up till this week since Labor Day. So I knew that we had started trading VIX Weeklies options, but I hadn't paid nearly as close attention to them as I wanted to. I took a look at the open interest for the first weeklies in the VIX space that settled, which settled this past week on Wednesday morning. And the open interest was like 110,000 contracts, which just absolutely blew me away. And for the ones that expire on November 4th, next week, the open interest is a little over 100,000 right now. I really didn't think that we were going to see, I felt like, people were waiting for VIX Weeklies and that we would see trading there. But, open interest like that right out of the box is pretty impressive. And then the other, kind of the other point behind that is next Friday we get the employment number. And that's kind of like what's the first employment number that we're going to have the market digest since we started trading the VIX Weeklies options. And that's when I really felt like we were going to see, heightened activity in that space. So it's really encouraging to see, those sorts of numbers right off the bat.
Yeah, those are sizable numbers. That's a trend we've been keeping an eye on with great interest here on the program. Sometimes during the show when we're recording it, we're seeing big trades going up in the weeklies. And you're right, it didn't take long. Here we are, I think we're about week 4 or so with the great weekly experiment, and so far seems to be a rousing success. Like you mentioned, the series going out over 100,000 contracts open interest. I'm looking right now as we're recording, 26, nearly 27,000 up the Nov expiring on the 4th, 14 puts. We got 16,000 of the 19 calls, 12,000 nearly of the Nov 16 calls. So there's size open interest in these products, 17,000 of the 15 puts just in that first series there. So you're talking size open interest in these products. And I think like you, Russ, I think a lot of us thought that it was going to be a bit of a slow burn. We had seen VXST kind of take off, do pretty well, then immediately turn around in that trajectory and not do so well for the remainder of its short life. And we kind of thought maybe that was kind of going to be telling for short duration, short-term volatility contracts. And so a lot of people expected, VIX weekly options to kind of follow suit. And it seems like so far, I actually remember the moment. It was on the show a few weeks ago when Mark and I were doing kind of a rundown of what we were seeing so far. And it was some decent paper, a couple hundred lots here, maybe 1,000 lot, decent size. Then all of a sudden it was a pretty sizable trade. I think it was a 3-way trade, went up for, a decent amount of contracts, 15 to 30,000. That's when we both kind of collectively had our eyes open to say, wait a minute. These products are here, and they're here a lot faster than anyone thought, and they seem like they're here to stay. So yeah, it seems like the narrative there so far is size paper. Just today, 500 of the 32 halves expiring on the 11th going up. There's 750 open, thankfully, so hopefully that's closing paper, but still a lot of paper going up. So yeah, I'm with you on that one, Russell, in that these things are taking off, I think, a lot faster than I think anyone anticipated.
No, absolutely, and now that I'm in more of a market observer than a trading role, I've gone through a handful of product launches that we've had and our competitors have had, and the one commonality that I can tell you is you just really don't know what's going to happen until they actually get out there and start trading them. Everybody can. Mark, Sebastian, and I were trying to anticipate when VXST came out, what the implied vol would be for those options. And I think we actually did that on your program. And we dramatically underpriced what ended up happening is with respect to the implied vol of the near-term VXST options, which were not as a successful experiment as the VIX Weeklies have been so far. It's very, very difficult to guess until these things actually – they turn the machines back on, as one of the Dukes would say, and we've got a new product there when they turn the machines back on.
So I've got a question for you, Russell. So sure. One thing I thought about VXST, it was a cool idea, but the market seems to be used to VIX, right? There's a lot of, you just kind of get used to certain things, I guess.
Right.
So what I wanted to maybe, because this is a question that I know has been asked from our clients, and I think one of the reasons on the success is why the new futures, the new weekly futures, are so successful. And could you explain a little bit about like the dynamic of how the new weekly product is priced, versus how the old weekly product was priced, or the VXXT, which could potentially lead to why it's been such a popular launch.
Well, VXST is basically, for lack of a better way to put it, a 9-day VIX. And the price behavior of a 9-day VIX is different than the price behavior of the 30-day VIX. In fact, I chart that on a pretty regular basis because it's nice to have a consistent short-term volatility index. And when you're asking people to trade something new, and you really want to think of it from the institutional standpoint, there's some risk involved in spending time getting up to speed on a new product. And if something is completely new, like VXST was, there's more of a learning curve. We have not had VIX Weeklies, but we have had every month we have had VIX Futures and Options that only have a few days left to expiration. And so you could actually go and you could take a look at how the futures behaved and how the options behaved, when there were only 4, 5, 6 trading days left until expiration. And what and we launched the futures back in July. And I've been watching the futures very closely, and the futures have behaved in a very similar manner. The weekly futures have behaved in a very similar manner to the monthly futures when they only had a few days left to expiration. So you've got an automatic familiarity there. And then there are certain strategies that make sense going into expiration, and I think some of those strategies have been what have been traded so far. So it wasn't as much of a behavior change as asking people to trade options and futures on a 9-day volatility instrument. If you remember back about a year ago, we actually made a slight change to the VIX calculation. And we used to use monthly options, and we switched over to using the weeklies that expired just before the 30-day time frame and just after the 30-day time frame. And that change has not had much of an impact on the VIX calculation. But what it allows us to do is now we actually have an S&P 500 series that has contributed to the VIX calculation. Every week we have one that is 30 days out in the future, and it's given us the ability to calculate a settlement value for VIX futures and options that are expiring every Wednesday. And the settlement process is exactly the same as we had before. So there's a lot of familiarity here, even though something is new. So I think that's one of the reasons that we've seen strong volume right off the bat.
So you guys, there was some planning going on over there in the CBOE.
Whenever we do something like, and we even said this when it was at our risk management conference last fall that Bill Speth announced that we were tweaking I think we called it enhancing the VIX calculation. And he even said in the announcement, he said, look, now we're going to have, this is going to open the door to have weeklies on the VIX futures and the VIX options. And everybody was so focused on the index change that just kind of went over a lot of people's heads. But, it was planning, as you put it, and it looks like it was really good planning because of the volume that we're seeing.
Yeah, it's definitely been a run. It's so far, I guess, it's like when you first added weeklies to Apple. Everybody knows Apple. Everybody knows that there's expiration every week. They know how options expire for that week. So now all of a sudden you're like, okay, we just have more stuff to trade. Although there's a slightly different settlement with the weekly future as opposed to just the underlying. And
also the fact that we've got weeklies on 400 stocks, ETFs, and indexes. I think there's already people are already comfortable with the short dated options. So I think that couldn't have hurt.
I remember well when you guys first announced that you were incorporating the weeklies into the calculation, because we kind of misread it for the first go on this program. We thought, wow, they're going to throw front week SPX into the mix. That's going to be pretty crazy. And then it turned out you guys were just using the weeks around the month to kind of balance it out, which made a lot more sense after we looked at it. We said, wow, they're really going to make VIX rock and roll.
I tried to intermix the term non-standard expirations when I'm talking about weeklies. Because that's really what weeklies are. Is they're for the most part, they are in the equity world. They're the non-third Friday expirations, and for VIX, they're the non-standard VIX expirations. That's just it's probably a better visualization as well. Because when you hear weekly, you're automatically thinking, oh, so what's expiring next Friday, not what's expiring in 5 weeks that doesn't happen to be a third Friday.
I love bringing Russell on the show because he brings our conversations all sorts of interesting areas. Since you brought up the adding the weeklies to the calculation there, I'm sure you saw it recently, a couple of weeks back, I believe it was, Russell. Manish Deshpande, well-known guy, not known for being a tinfoil hat kind of guy in the volatility space. He's spoken many times. In fact, I always run into him over there at RMC. It seems like every year. He came out with a piece recently saying he thinks that the adding of the SPX weeklies to the VIX calculation was the culprit for why VIX initially was unable to be disseminated for 30 minutes, infamously back on August 24th when everything was melting down. I'm sure you had a chance to look at the piece. So what's your take on that? You think he's on the right track there? Or you think it was something else entirely?
I know it was something else entirely because I was on the pit.
Well, there you
go. The true issue was that the futures were limit down right off the open, the S&P 500 futures. And with the S&P 500 futures limit down, it was difficult for guys in the VIX pit, in the SPX pit, to put a decent valuation around the options that they were quoting. So it took a little while for the limit down in the S&P futures to clear up. And as that cleared up, we were getting a VIX reading, but we didn't start disseminating it until it kind of was not moving dramatically from moment to moment. So we just waited until we got the S&P futures to settle down and the guys in the SPX to settle down as well. What I would equate it to, and we don't really have this issue anymore in the stock world, but back in the day when we would have a really a volatile day in the S&P 500 and the futures were down an awful lot, the New York Stock Exchange would have, they would be looking to get more buy orders or more sell orders because they would have trading imbalances around the open. And it was more of we had trading imbalances than, anything that has to do with the weeklies.
I like it. Russell coming on and busting a few myths. I'll have to make sure when we bring Manish on that you tell him you called him an outright liar.
No, I did not call him an outright liar. I can see what he is saying, that there probably is. And when you and I don't know the exact numbers here, but if you're quoting, 3,000 options and all of a sudden you make some changes and that market is quoting 10,000 options, there can be a pretty good assumption that may have something to do with the inability to quote a derivative product on that market. But really, it had a lot more. It had a lot more to do with what was going on in the futures pit and the futures quote than anything else.
I like it, Russell. You're going to fit in very well here because we like to put words in people's mouths every now and then. So it makes the show that much more fun. Well, Andrew, this segue into the VIX Weeklies has been interesting. We're already halfway through the show and we've only just touched on the weeklies, so we haven't even gotten to your rundown of the week yet. But a lot of fun stuff to digest in those weeklies. Weeklies aside, what else is catching your eye out there in the volatility space this past week?
You know what's going on right now in the vols? Actually, as I'm watching VIX kind of drop, I call this kind of the decay period. Meaning, I always view there's all kinds of ways to make volatile when we're talking VIX or the VIX futures that make the products move. You have decay. The VIX Cash can move, pulling the future down, or the futures can move and the VIX Cash doesn't do anything. Right, so there's usually kind of, I think of it in three different ways. And right now what we really have is, VIX is moving down a little bit. We got non-farm payroll, so it'll hang on. But mostly we just have some decay. The futures kind of sag a little bit. So it's I'm just going to call it I think anyway, a more listless time, at least from now until the non-farm payroll number, to trade the vol products, because they have been ripping and they've been tons of fun, August, September, and most of October. And now all of a sudden, I feel like, they're like a horse after a horse race. They've run their race and now they're, taking a breather while we try to figure out what's going on with the rest of QE and all this other nonsense that's been driving volatility all over the place. But I'm thinking, it's not in the prognostication area yet, but we had a massive vol crush actually at the beginning of the week, especially in the NDX. Prior to Apple, it kind of got bid up. We had some pretty savvy guys that traded that well, and ever since then, it's been sort of it's run around looking for. It's kind of like whack-a-mole. Anything where the volatility pops its head up, you're going to hit it with a hammer as fast as you can. So. And that's what it's been as far as from a vol perspective, at least from where I've been standing.
Don't jump the gun yet. We'll get to the prognostication section soon enough. You can call for your VIX above 25 again very shortly. We'll be there in a few minutes. So keep your pants on that one, sir. Speaking of VIX to the downside, Russell, I was quoting some of your data on recent shows a few weeks back. You put out those lists of streaks of the VIX, how long they were above 20, and I think we closed in there. It was about 30 sessions, which is pretty far up there. It was the longest streak since Jan of 2012 on the upside. I think that put us up there with I believe Valentine's Day of 1990, some obscure period there. But it kind of made me think too. I mean, granted, there's a lot more data points here because we're south of 20 now. This is kind of where VIX normally lives, so the runs should be much longer. But I'm wondering, will there be a second series coming out of you of VIX runs below 20?
No, but I'll do that.
There you go, getting homework.
I had not thought about that, but yeah, I'm more than happy to do that. That's a good thought. Actually, probably the next data study I'm working on, I'm totally going to change gears on you here. I'm going to take a look at the volatility of the futures based on changes in the assets under management by the ETNs. Because there's been, I help field a lot of reporter inquiries for our PR department with respect to VIX, and there's this feeling that the growth in assets under management in XIV, SVXY, VXX, and all those guys could be leading to increased volatility in the VIX futures market. And I want to explore that a little bit.
That would be awesome. I hope you do. I mean, that's a frequent question.
I don't think that's an issue, but I need to quantify it before I really answer it like that. One of the other things that I put out there with respect to VIX recently was which months have the highest average VIX going back over the last decade or so. And number 1 is October. Number 2 is November. A lot of people don't realize that. You always think that we get through October and it's smooth sailing.
It's all that Turkey Day volatility.
Yeah, it's actually November came in second. I know 2008 helped some, but even if I took 2008 out, it was like third or fourth.
I wonder if the elections have anything to do with that every few years.
There are a couple of elections. Well, I guess there's every 2 years there's an election.
Every 2 years.
That might have something to do with it as well. I could look at it even versus odd years. That might have something to do with it as well. But I just, that you're making fun of the call for VIX to be in the mid-20s. Based on history, I would actually think that November is going to. Right now, we're a little above 14. I would think the average is probably going to be 2 or 3 points higher, just based on history.
Yeah, it certainly seems like we could be leaning that way. He's giving you some fuel, some ammunition for the crystal ball there, Rock Lobster, so perhaps you're not alone. But I would be very interested in seeing that volatility in the futures study, because that's a question that kind of goes back to the tail wagging the dog question that we get a lot. In fact, I think we have a listener mail somewhere around that about that today even. That's a frequent question we get here on the program and on the website. There's so many different products out there. How does their rebalancing, et cetera, how does that impact the mothership? And you're right. So despite the fact that's a very widely held question, there's been few actual attempts to put some solid concrete data behind it. So I think that would be fascinating stuff to see just personally from my own edification. I would love to see that data. So there we go. Russell's been on the show for about 40 minutes now, Andrew. And he's already got 2 homework assignments from us, so he may regret coming on going forward. But you touched on the futures. Let's get to the futures really quick here. They are kind of squeezing it out a little bit again. We kind of remarked on that in recent weeks, last week especially, and the week before. It seemed like the market had already kind of started to discount things like China, things like the Fed. We had seen kind of getting rid of that backwardation from a few weeks ago, going back into the contango, and then kind of just stripping the vol out just across the term there. It didn't matter where you were looking. They were kind of squeezing it. It seemed like even last week, going into this week with the Fed, they were still not reticent to clip some vol out of it, and now we're getting some more coming out again after the Fed injecting a little bit of life ever so briefly back into the market earlier this week. We touched on some other things, and Russ, I wouldn't mind getting your opinion on this before we move into some more of the VIX options stuff. Yet another product in your neck of the woods, the Skew Index. Mark and I were discussing on the last episode in a week or two, last 2 episodes actually, that thing's not known to be rocking and rolling, but has been moving quite a bit of late. It was in the 120 range last week. 2 weeks ago it was 151. It was 30 handles higher, and this week it's about 13 handles higher from where it was last week, about 135 or so. So you're not prone to see this level of swings out there in the Skew Index. A, have you been following along with this? And B, what's your take on kind of the Skew Index rocking and rolling these days?
Well, I have been. Of course, I've been following it. It's volatility oriented. That's all I do. And actually, we had a pumpkin carving contest here, and I just entered a pumpkin that had VIX carved into the side of it. And maybe I'll win because, I was supporting the product around here.
I'd imagine CBOE would smile upon that pumpkin.
They did. The people that use like M&Ms to make it look like a pumpkin was throwing up, they should have been company men like me. So no, Skew. The interesting thing about Skew is it's measuring, basically the slope of out of the money implied vol versus near at the money implied vol. So what you can actually have happen is Skew can move up just because near or put options with a strike price that is closer to where the S&P 500 is right now is actually moving lower. So part of it, we've worked our way down to, I think the lowest level since August in VIX right now. That's the denominator on Skew. So it's not necessarily that there's lots of fear and lots of buying out of the money puts right now, but that implied volatility is still holding up. It's just holding up relative to a number that's moving lower. So sometimes it's kind of difficult to use skew by itself. I think you have to look at it relative to where VIX is. And if VIX were at 20 and skew was, in the 130, 140 range, I would read a lot more into that than VIX at 14 and skew at the same level.
Yeah, it's something we've always said here on the program, that volatility, and that includes skew, has a context. And so quoting it, abstaining from anything else out there, it kind of is a bit of a misleading number. That's something we've also said about the skew index on the program as well. It's kind of hard to read into the tea leaves there directly without seeing what else, because you're right, so many little minute changes in the marketplace could have dramatic impacts on that number, as we've seen just in the last few weeks out there. An interesting one to watch, kind of a hard one for a lot of, particularly in the retail side, to kind of wrap their heads around, because there are so many bits of minutia involved in quoting, and not the least of which that is quoted in a 100-plus number, which makes some people kind of roll their eyes a little bit. But still, it's an interesting one to watch, and certainly one of the few barometers out there we like to keep an eye on. We already hit on the VIX Weeklies. Let's just get into the VIX Mothership options then, because they've been doing fairly well as well. Another decent, robust volume week out there. We saw some interesting trades. One of the bigger ones that caught our eye this week looks like someone loading up on a size vertical out here. The DEIS 2025 vertical going up about 45,000 times. That would be an enormous trade in any other product. That's just kind of par for the course out there in VIX. One of the things that makes VIX interesting and also challenging for us here on the program, Russell, is we always like to try to find some interesting, unusual activity. We do that a lot of our other programs, and VIX is kind of just an ocean. So picking out a few drops out of the ocean is always something of a challenge. Saw some interesting, looks like some risk reversals going up about 10,000 times as well. Looks like paper selling the 15 put, buying the DEIS 28 call, all that in December, I should say. Close to 10,000 times, about 9,700 times out here. Looks like, looking at the strikes that are lighting it up this over the past week or so, the hot open interest strikes right now. The NOV 30s leading the charge, about 341,000 open on there, so that's still the hot active strike. Number two, the NOV 20s with about 317,000 open, dropping down to about 265,000 for the NOV 25 calls. Then out to Jan, getting away from NOV for the number 4 spot, 245,000 of the Jan 30 calls. Getting down to number 5 is the NOV 26s, 220. Then dropping off a bit, 171,000 of the DEIS 20 calls. And number 7 will be the Jan 22s with 163,000. Got to go all the way down to number 8 to find a put on the list this week. It's the NOV 15 put with 160,000 contracts open, and then round out the top 10, the NOV 27s and the NOV 18s with 147 and 141,000 contracts open, respectively. About 6.7 or so million contracts open, about 4.8 million on the calls, and a little bit less there, obviously, on the old puts. When we're talking, looking at the open interest total right now, it's in about the 64th percentile for the past year. So decent volume, but not a ton of open interest right now, as you might expect. Again, so a lot of interesting stuff cooking out there in VIX land. Before we wrap up on the equity side of the fence, I want to make sure we touch on at least a little bit what's been rocking and rolling. We are indeed in the midst of earnings season. We saw a lot of big names coming out this week as well, and it seems like, for the most part, most of them underperforming their vol, underperforming their straddles out there, with the exception, it seems like, of LinkedIn, which kind of knocked it out of the park last night. LinkedIn, I think it went out at about a $23 straddle, which was pricing in nearly an 11% move, and we saw it open up about $23 and up about $26 so far today, intra-session. So clearly, LinkedIn knocking out of the park. Everyone else kind of a bit of a whimper out there. EA pricing in nearly a $5 move, or about 6%, opening up off $1. Intraday, though, squeezing off a little bit more, down about $3. So catching up a little bit, but still underperforming there. Baidu closing off with straddle about $13. That was nearly 8% that they were pricing in, opening off about $8. Getting up about 13 intraday. So that one may be catching up now intraday to what they were pricing in last night. Good old S-Bucks, kind of disappointing from a vol perspective, at least for a lot of our listeners. They were pricing in about 5% move, which was a little over $3, opening up about $1.25 down to the downside, and then essentially being unchanged as you're looking at it right now. So a lot of interesting stuff to keep an eye on. But so far, at least from a vol straddle perspective, earnings season so far kind of lining up this week, at least lining up a little bit more tepid than certainly the Amazon, Google, Microsoft blowout week where it seemed like everything was just lighting it up. Mr. Rock Lobster, any of these earnings really catching your eye over there in the pitch chat, or anything about the announcements this week from a vol perspective really intriguing you?
We looked at LinkedIn today. There was some opportunity in there, kind of last gasp with volatility selling. We're trying to set up some stuff for Visa. We mostly looking at volatility to sell after the earnings come out, and then try to smack it around a little bit and see if there's anything there. I did think the only thing I'd say is like gold is interesting in just the fact that it's kind of getting smashed, and it seems like the deadest product on the planet. I mean, GLD volatility is like below 13 now, and I guess the interest rate moves are kind of settling in, but you take the low volatility in gold as, just whatever the Fed says is going to happen, and gold's not going to move anymore, and the whole thing is just toast. So as far as individual earnings moves, we looked at a few. There's another surprise in Expedia that would kind of rip today. Mostly, we stayed away from any of any kind of pre-earnings activity, let's just call it.
Yeah, gold, of course, another interesting one. We've been talking about it on the show of late. In particular, we were talking about skew earlier, the upside skew in gold, particularly crude in the gold, big futures options, or indeed in the GLD options, was lining up pretty heavily to the upside so much. And again, our old friend Manish, we talked about earlier, came out talking about buying 1x3s on GLD, which is not something you see very often out there. That's how rich the skew was getting out there. And looking at it this week, it seems to be a bit of a reversal. Not surprised given what we've seen coming out of the Fed this week and its net impact on gold. Last week we were talking about a pronounced negative skew, actually showing a strong call bias out there in GLD in particular. It was south of negative 100 out there, which is pretty steep from a call bid perspective out there in gold. This week, it's back to more even positive 4.5%, which shows you that a lot of that bid in the precious calls has come off over this past week. From a gold vol perspective, looking at, of course, good old GVZ hovering south of the 16 handle. So clearly off the recent highs they set back in August of around close to 26, but still a little bit richer than it was kind of before the gold storm erupted in mid-July or so. I'm looking at the gold skew here and the big gold options. And looks like the bid has kind of become a little bit more normalized now. There's bids in both directions. The smile has kind of crept back in after being very, very call rich, very call heavy over the past few episodes here on the program. Russell, do you pay a lot of attention out there to the shiny stuff? I know you guys obviously have GVZ, which is an interesting one. Anything catching your eye over the past week from a gold vol or skew perspective?
Well, on the gold side, not really. It's like you said. It's just I think both of you have basically alluded to that. It just hasn't been doing anything. It's been stuck in somewhat of a range. I think it took a while for GVZ to finally settle down from things that happened almost a couple of years ago. And the only thing I can think of is that when volatility finally really just settles down and is kind of dead, that's the time to be the most concerned about getting a big move in one direction or another, especially if it's going to surprise folks. So I know that's basically being very much of an economist and taking both sides of things, but it's lulling people to sleep. And sometimes when that happens, I mean, the equity market was lulling people to sleep in the middle of August, and then we saw what happened.
Yeah, I'm not sure if you caught it, Russell, but we did, speaking of economists and gold, we did an episode of our long and short of futures option show we do with our friends over there at the CME, and they actually brought on one of their economists to discuss exactly that. He did some very well-timed research called Gold Storm on the Horizon, ? And it came out mid-July, and he was talking exactly about that implied vol out there in gold options was at a historic low, and it seemed to imply, pun intended, that something was afoot on the horizon. He was speculating on a sell-off in gold and, of course, a spike in gold vol. And we did initially see that. Now we've seen kind of gold all over the board since then. But from a vol perspective, he was certainly dead on. Who knows? Maybe perhaps we're due for another round of gold vol in the near future.
One thing from last week on the earnings, I'm going to backtrack here, on the earnings end of things that really caught my eye was Apple. There was all kinds of bearish talk about Apple going into earnings. And, but when you took a look at the options, there were an awful lot of very large neutral option trades. I think it was Tuesday afternoon into the earnings announcement. And sure enough, the stock, I think, only moved about 3% off of earnings, which is a lot less than its normal 4.5% move. So don't pay attention to the headlines. Just look at the numbers, because the numbers seem to do a much better job signaling what's going on than what the pundits are doing.
Oh yeah, that's what we always talk about here on the network. Forget about what your analysts or whisper number or any of that kind of nonsense, and really look at what the actual money is speculating on, because that's where every study will tell you that's the most accurate prediction, because people are actually putting real money at work. And that's why predictive markets like that have always been so accurate compared to just random other types of prognostication out there. Speaking of prognostication, we've been talking quite a bit here, so it's almost time to get to the prognostication segment of the show. I know Andrew is getting very excited, but we do want to hit on crude really quick. I apologize, listeners. We're not going to have a chance to really, I don't think, get to your questions this week, but we'll save them for next week. Before we wrap up the vol review, of course, I'd be remiss if I didn't touch on the other commodity that gets a lot of your interest, a lot of your love, a lot of your questions. That is indeed crude. Looking at it from a vol perspective, hovering again in the low 40 range, both OIV and OVX. Hovering about a 43 or so coming into the show today. So still roughly around the same levels we were seeing on recent episodes as well. Again, nowhere near the highs recent of the 60 handle out there. Again, and so if you were following that Goldman report from a few months back telling you to load up on all the implied vol you could find in crude, it hasn't worked out so well from a net perspective. They're looking at the volatility skew has it's lined up out there. It's still pretty much lining up the same way it has been the last few weeks out here, which is a pronounced bias to the puts. Still a lot of concern, a lot of hedging, a lot of speculative interest on the downside there. That hasn't really changed. A little bit more firmness to the calls perhaps this week, but other than that, it still looks like the puts are leading the charge out there when it comes to crude. We'll see if that plays out in the week to come. But unfortunately, it's all the time we have for the volatility review. We took a lot of different topics today. That's what I love about this segment. That's what I love about bringing on guests like Russell, because they bring us in a lot of interesting directions. So don't worry, listeners. We'll get to your questions next week. But now it's time for us to keep on rolling into our final segment. It's time to open up the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, you guys know the drill. This is the portion of the show where we prognosticate recklessly, some may say wildly, about the future, what the volatility gods are holding in store as we're coming to a close here on the program. The old VIX Cash hovering right about 14 even, having sold off about half a point or so throughout the show. So again, seeing that bit of relaxing, that bit of exhale going into the weekend. Russ, I know it's been a while since you've been on. This is indeed the portion of the program where we try to look ahead and see where's volatility going to be hovering at this time, our showtime again next week. We typically do it in terms of the VIX Cash, but you could use any instrument you prefer. If you want to go crazy and go Skew Index, go ahead, sir. The floor is yours.
No, I'm not going Skew Index. I'll go VIX. Whenever we're starting to head into what appears to be a higher volatility regime, and the first thing that happens when we switch from low to high volatility is a spike like we saw back in August. And typically the floor for volatility has been right about where we are right now when we get into what we refer to as a higher volatility regime. So I have a hard time seeing VIX under 14, even as we get the employment number behind us next Friday. So I would say VIX maybe a point or two higher than where we are right now. About a week from now, I'm supposed to point to next week.
Yeah, our showtime.
That's where
next
I'm
week.
at.
There we go. A little bit higher.
So, that and the seasonality around November that I mentioned earlier really makes me think that the odds are much more in favor of higher VIX about this time next week than lower.
Yeah, that seasonality for November, I hadn't priced that into my calculations going into this, so that may have to reconsider a few of my calculations. But I know the Rock Lobster here is chomping at the bit. He's feeling very precise right now, Mr. Rock Lobster. I know you're itching to get another swing at the bat. So what are you feeling for this time next week?
I'm feeling boredom. I'm feeling boredom. I'm feeling 13.2 VIX.
Oh,
that's unusually. The thing. Russell's saying it's going to be a point higher, and I'm like, yeah,
that's all right.
It could be. It could be. I'm just waiting. Okay, unless the employment number is some sort of disaster, the only thing I would say is because, now you're looking at December 1, 2, you're 30 days forward. VIX starting to pick up the Fed. It's going to be right at that spot where they start to pick up whatever the next big Fed meeting is.
Mm-hmm.
I don't see the vol going down to make a ton, but I just feel boredom might kick in. I'm looking at VIX today, and we're up like less than 3 handles in the SPX, and all I can think of is boredom. So unless something changes, Russell will be right, and then he can come back and on his first show give me a smackdown. But I don't know. I'm just seeing not a ton of excitement.
Well, I can tell you from walking around the floor this morning that you're gauging the boredom correctly. There's a lot of it going on right now.
If you gauge traders' boredom by anything, you'd be crazy all the time. Traders are bored all the time. They're always throwing paper airplanes and putting signs, and they're an easily bored group, shall we say. But Andrew, you're very precise prognostication this week. Very interesting. I like it. Going detailed into the decimals. If I had to speculate, I probably would lean more Russell's way, but since he already went north and you already went south, that would be boring. So I will split the uprights, and I will say we're going to be right around this level again next week. Obviously, a lot of wild cards in the mix next week, of course, particularly for the way we record this program, because what VIX Cash will be in the morning, we're on Nonfarms, versus what it'll be in the afternoon by the time we record this show. Probably two very different numbers. But that said, it could be a little bit of easing, but I'm going to guess right around. Doesn't give me much room because Russell only got like a point or so on the upside. You went 0.8 to the downside. So I guess I have to say exactly around 14 in order to give myself a little bit of wiggle room. So I will do that. I will split the uprights, and we shall see next week who is indeed the prognosticator du jour when it comes to all things volatility. Unfortunately, that's all the time we have for the Crystal Ball segment, listeners. It's also all the time we have for this seemed like it flew by episode of Volatility Views. But before we go, as always, let me check back in with my cohorts here, my partners in crime. Starting off with you, Mr. Rhoads. It looks like all things going well, you'll be back on the show on a regular basis going forward, which is something we can look forward to. And what else can our listeners look forward to? You mentioned some of those great studies. What else do you have coming down the pike that may intrigue our listeners over there at the Options Institute, or maybe your books or whatever else you're working on?
My second Volatility or VIX book is going to come out probably in late January. I have a sabbatical from something that I do starting in the middle of December and running through about the middle to the end of January, and that is getting the book done time. So I should have, and I'm going to self-publish it, so the price is going to be extremely affordable.
Smart man, I like that. I think self-publishing is the way to go these days. Big publishers bring very little to the table unless your name is, Stephen King or Danielle Steele. They'll promote the hell out of them, people who don't really need it. Particularly finance books, they're not going to put a lot of weight behind it. You might as well go out and probably do better and make it easier for the end user to get it. If you want to find his stuff, listeners, it's RHOADS, Russell Rhoads. There you can find him on Amazon and all the other fun place. And it looks like Russell will be joining us again down the road here regularly on the program, so that should be something fun to look forward to. And Mr. Rock Lobster, aside from surprisingly precise guesstimates for vol, what else do you have coming down the pike that may interest our listeners?
What's the crystal ball without an exact pin? I'll even say no future 1525.
So you realize we're at 13.1 next week. You lose.
I know, but everybody. We'll just have to take it as it comes. What do we have? Oh, we have a vol trading class, an actual volatility trading class on Saturday, the 7th, understanding how all of this volatility stuff works. you pay Option Pit about an eighth on a 10 lot, and we teach you something about volatility, or you could read Russell Rhoads' book, either one, and you'll learn some stuff. Ours, a lot of practical trading type stuff, and hopefully it's the class is filling up. So if one thing about volatility is there's a lot to learn, but once you do, it makes it a lot easier. That's all I'm going to say. Listen, if the CBOE launches a product called the VIX, you got to know what volatility is.
Well said, sir. Surf on over to optionpit.com to learn more about that. And, of course, CBOE to check out all the things that Russell has going. Click on the Options Institute tab. And, of course, our friends over there at LiveVol to surf over to LiveVol Pro to check out all the cool. That's where we get a lot of our data for this show that we bring to you every week. And on behalf of the Rock Lobster and, indeed, Russell, who is nicknameless, but that won't remain that way for long, and, indeed, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and, of course, for sending in such great questions. We'll get to them next week, I promise. And we'll see you next time for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.